Okay, update on uranium here, and we do have a mixed bag, and I'd say that is generally because the overall market is quite weak. You have the Fed trying to talk stocks down. You have markets, broader markets down the last six of the last eight trading days, and so we probably have an early weekly cycle top for the S&P 500, Nasdaq, and QQQ and IWM, which will drag uranium down. But I would focus on the bigger picture here. And if you don't have a position, not a time to get in probably, but you should be watching it closely for what's about to set up. And so these are the monthly charts across some of the assets, ETFs, companies, etc., that are invested that you can use to play this uranium bull. And you can see I drew these lines to show where we needed to make new monthly highs. Cameco has clearly made that high very with force. Some other ones, the URA ETF, the URNM ETF, Fission Uranium is up there. Paladin Energy actually came up and then got rejected, so that'll be interesting to watch. Next Gen is up there really nicely. So these are making multi-month new highs, incredibly bullish. Same thing for UEC. Denison did not quite get there. You see it pulled back right at that level where it would make a new monthly high. And so you could call this sort of a double top. So generally looking bullish if we're thinking for the next 6 months, although I would say the next few weeks, we probably have sideways to lower at best given the overall market is coming down. So we'll zero in on CCJ just to get a sense of the cycle, and I want to explain how you might use cycles to estimate where the weekly and daily might land. And so let's start with the daily cycle for CCJ. So we made a new high today, a fresh new high on day 19. So we're definitely getting to a point where we're closer to the cycle high than we are to the beginning. You can see the previous cycle had a top, sorry, I'll take this crosshair off, might be harder to see. This previous cycle had a top on day 28. This one before that was really bearish, had a top on day 11. So we've obviously made it all the way to day 19. But this could totally be your daily cycle top, even giving the look of this candle. Yet notice these last three candles for the last 3 days have been very bearish looking, yet we've made a new high each day. I will say this definitely looks like it's a rising bearish wedge on a smaller time frame. It's looking to kind of break down here. But again, broader point, if you're not in, wait. If you are in, I'd say also wait patiently. Probably getting a pullback here, not something that I would be super alarmed by. We would want to hold the 26 level, right? Like this is our last major higher low. This is also another higher low. I think unlikely we'll hold this, but we'd want to if we even come down below 26, hopefully a quick snapback. And then looking at the weekly chart, which is maybe more relevant even, we made that new daily high, also made a new high for the weekly cycle, and it's week 10. Last weekly cycle topped out week 12. The one before that, week 7. So we're definitely not early in the weekly cycle, but we're also not super late. And we've clearly made a significant new high above the last cycle's high, right? So that was our last high for this previous cycle. And so we're well above that 28.49 level. That's what I would be watching on the pullback. We'll probably get below that on this daily cycle decline for sure. But that'll be an important level to kind of recapture to indicate that we are making our way back to the upside. So thinking about the way weekly cycles sort of play out, if we get a weekly cycle that's around 20 weeks, then being on week 10, we can estimate, right, that the weekly cycle, if it were to go to, let's say, exactly 20 weeks, that would put us at a weekly cycle low on June 13th, right? And so if we think about where that puts us from this candle, that gives us another 9 weeks. And so you imagine if this week isn't the weekly cycle high, maybe we get 2 more weeks, right? We get another higher high on week 11, another high on week 12, and then we begin the descent down into the weekly cycle low. But think about this. We have a weekly cycle that's coming to an end, but also a daily cycle that's coming to an end. So if we think about the daily cycle, let's noticing that these are around 25 to 30 days. If we assume that this daily cycle will end, let's just say 30 days, just for argument's sake, that would put us at a weekly cycle. That would give us our weekly cycle low on April 28th, right? And so that would suggest to me then that this is the second to last cycle within the weekly cycle. Because if this cycle ends on April 28th, and then we have another cycle that, let's say, goes for, let's call it in the 30-day range, that puts that next cycle low at June 13th. So you can see that gives us a guesstimate as to that might actually be a better indication of when the weekly cycle low is, right? That maybe we're actually looking at a weekly cycle that would end on that would be week 20, right? Like that would line up almost perfectly. And so given that that's when we might expect the weekly cycle low, we can start looking out for a weekly cycle high. Again, that'll always be indicated by a swing high, but we'll know once we're in week 12, week 13, if let's say we make it to week 15 and we're still seeing new highs, then we know to be extra cautious. That said, again, with the broader market in a sort of downturn, potentially having another bearish weekly cycle, it wouldn't surprise me if this was our weekly cycle high, which wouldn't even be super bearish, all things considered, because we're way above this last weekly cycle high, so we're making higher highs. Now we'll want to see if we can hold a higher low, obviously. And I'll switch over to DNN really quickly, because I think this one is really exciting. It's underperforming CCJ right now, but I think there's huge potential here. I mean, you can see it kind of coiling up here. So we did not make a new high today yet. Our high for the daily cycle, has been week 18. But what I want to show is this monthly chart. The risk reward here is pretty incredible, right? So this was our major top in late 2007, and we had this massive decline, right? Probably helpful for us to just quantify it. Let's put a percentage to it, right? So we had this swing high here and took us all the way down. My God, 96% decline, peak to trough. And then we had this bounce out of that major low. So we bounced 400%. We had a little bit of a retrace here, and then we had another higher high, right? So we came up, we came down, we didn't make a new low, and then we came up. So we actually rallied 700% after declining 96%. If we're thinking about absolute terms, we dropped almost 14 points, and we only recovered less than 4 points of it. And then we had this massive decline. So we made a new low below this low, and then we chopped around for all these months, these years, and then another new low, more chopping, and then another new low. This would seem to be the rebound, right? You almost think of this as what people kind of call a reverse symmetry move. So this matching this, except to the upside, obviously. I don't know that we quite get there, especially when you think about market cap, what that might mean. This has about a 1.5 billion market cap, so you do have to kind of keep that in mind. But think about that. This was our major lower high, where if you had been let's say you rode this all the way down, if you somehow were able to hold on after a 96% clobbering, as we were coming up here, you might have gotten really excited, especially right here. I mean, this looks like a forceful rally. If we kind of zoom in a little bit. Sorry, my computer's freezing. If we zoom in a little bit, you can see we had this big, beautiful monthly bar, bullish engulfing, and then we had consolidation the next month, and then boom, boom, boom. You're excited at this point. More follow through. This was a hard month to stay long because you broke the low from the previous month, but you resolved in a big, beautiful green hammer. So probably feeling very bullish. Then you have this toppy looking candle, and then boom, just a massive decline on the monthly level, and then it continues. Then you have your bounce, lower high, this high being lower than that one, chop around a little bit, then really take them out. So what is this level? What is this level, right? We want to know what that level is. And that level is 432. Well, where are we now? We're at 174. I mean, the opportunity there is massive. And my sense is once we can break out of this, I mean, these huge wicks tell you there were huge sellers that wanted to get out once we got above these levels. And so they got out. And so the question is when we come back and attack this, once we kind of break above, I'll just draw this little ray. Once we kind of break above, this sort of ceiling right here, like just, I mean, again, think of this as a general area, right? Like, and I think it broadly corresponds to like the 213 level, right? You would think this is mostly clear air, and this feels like a spot where we're going to have a vicious pullback. If we're able to clear, I'm not saying we're going to go from, $2.13 to $4 overnight, but you could see this happen in a period of weeks, maybe a month or two. I would expect a violent pullback at this level because you have to imagine, think about how many people sold here, right? Just a lot of people were left holding the bag as it rolled back down, but a lot of people got out, right? Those people that were left holding the bag, and I don't know, this is a high from 2011. So you imagine most people probably got out around here. Maybe you finally gave up here. Maybe that COVID crash, like you were like, okay, I'm finally out. But you have to imagine this multi-year level, which also corresponds to this wick here, roughly speaking, right? This wick has a low of 463. So same neighborhood. There are clearly levels where there's been a lot of significant price activity. So I'm looking for a break above the 214 area. Could give you a clean 100% move. And again, doesn't mean it happens overnight. Won't happen in a straight line. There will be pullbacks, right? Like you imagine, I mean, again, like any sort of advance, it's not going to happen in a straight line. It probably looks, something more like, let's say we get out from here, we back test it a little bit, come up here, back test that, then boom, maybe hopefully back test this from above and it holds. This is actually probably cleaner than it will turn out to be. But you get my drift. It's not necessarily going to be just boom, a straight shot up here. But the risk reward around this is pretty amazing. You'll be able to set, I would imagine, a stop that's, relatively tight while still giving the trade some room. And you can see 100% return. More detail on when that trigger actually comes, obviously. But definitely something that I'm looking forward to that's very promising. And only one of many big opportunities in the uranium space.